I'm BC Clark with the Nebraska Enterprise Fund. Today we have our presenter, Robert Mejias, who's with Lenoma Financial Services. So they do insurance, they do taxes, and he's going to talk today about insurance. Now he's going to show a video. So if you have any questions, you'll want to write them down and save them for the end of the video. Okay, Rob? Go ahead and get started.
So apparently I hear myself on the video portion here, but if we were to kind of go through, what's involved when it comes to small businesses or small business insurance, well, there's a whole array of different things that kind of go along with this stuff. When you think of insurances in general, there's multiple different lines of various things. So for example, they tend to get grouped as one is considered property and casualty insurance. The other is considered life or health insurance. There's various vast, worlds, I guess, if you want to call it that. The experience that, we bring to the table, I used to work for a company in their claims department. They break them into different silos. So you'll have the producing side of things, you'll have the underwriting side of things, you'll have the claims side of things, and the actuary side. So the claims are sort of the after effect to what's involved, but basically, in a nutshell, when it comes to most businesses, you're going to touch on a couple of different avenues when it comes to the type of insurance you essentially potentially need or should be thinking about. So things like general liability or workers' comp, some individuals say, well, what do I need that for? A lot of our clientele tend to be within like a construction world or, a retail world, things like that. That's where general liability would come into play, or commercial property, things along those lines. Are you guys able to hear me okay? Yeah. Okay. So my apologies for earlier with the confusion on the video. This is a live, well, not a live. I'm live, but the video that I have for you here was recorded to kind of get you through things here. But so I'll be touching on bits and pieces of things. So, for example, some people may never have thought as being a business owner, something called key person insurance. Those things are out there. So when we're kind of going through looking at stuff, you kind of have to keep an open mind when it comes to things. So so this isn't really a PowerPoint presentation, it's more of a video, so I have to go through a couple of different video takes on it. So what's needed, or who's needed, or what's involved when it comes to this? Who is it that you're actually protecting when you're thinking about insurance? Well, there's various avenues to this thing. It could be the owner themselves that's being protected, whether it's one owner, multiple owners, things like that. The employees, the employees are a part of the mix when it comes to who actually can get protected in terms of this. Or what about the clientele themselves, outside the organization? You'd have never thought that you would be getting the insurance for their purposes of things, but not only that, but the investors, if you're a larger organization, who has invested with you when it comes to this. So there's quite an array of individuals that would be brought to the table. It's not just for your benefit per se, it's for the benefit of many. So what is it that you would be protecting when it comes to this stuff? Well, most of the time, let's take, for example, a contractor that's involved, their business property. We've had individuals that, you go out and you spend, say you're a drywaller or something, you can have about $20,000 to $50,000 worth of equipment that you might be hauling around in the back of a vehicle somewhere or in the back of a trailer. No one would ever think about, that stuff carrying insurance, but the fact of the matter is you'd probably want to have that on there. Only for the fact that, what are the chances? If you ever went to a job site, sometimes you see these tools and they have, they all have their names written all over their particular tools for that same fact that if it ever gets stolen, lost, or whatever, you have the ability to replace it. So what is the point of insurance? The point of the insurance is to kind of bring you back to where you were beforehand. You see, the insurance world has been around for many, many, many years. In fact, one of the first incidences of this is from the old world to the new world. From the old world, they wanted to ship goods and services over here. So to do that, they had to do that through by boat, for this to take place, well, the captain of the ship wanted to make sure that they were going to arrive safely, that they were going to make their earnings, their winnings when they got to where they were getting to, or when they arrived to where they were getting to at this point. So the only best way they could do that is they started to formulate this group of individuals. And, when it came to this, they wanted to say, look, I want to sell my goods and services over in the new world. And I want to make sure that, the cargo is going to get there safely, because the potentials for hazards or whatever damages lost at sea, that stuff arise. So when it comes to these things, there's an intricate older world that's involved with that. That's basically, that's how the Lloyd's of London initially started. One of the first original companies, the group of investors that got together, turned around and stated that they needed to, make some sort of deal happen at this point. So when that arose, they'll be happy to make sure that, if there were $50,000, back then that wasn't the case, but if you had X amount of goods that you were going to sell, that you were going to make $100 or $10,000 worth of gains on this, well, they will guarantee to put that money aside in case of anything was to happen. So it was almost an indefinite guarantee that no matter what, you were going to come back and be whole if you were ever put in a potential for a claim at this point. So, why is it that you do what you do? Or what is it that you do what you do? Lawsuits can happen every single moment of the day. Anything can occur. Like I said, I worked with an insurance company that used to insure the manufacturer that when they first came out, those deep fryers. You take a whole turkey and you stick it into the big bucket, and it cooks within X amount of time. Well, the problem is individuals would do this with inside their garage or on a wooden deck, and if you ever dropped a cold object into a deep frying pan, that thing tends to pull over, and when it does, that's a pretty bad, unfortunate situation. The house can go up in smoke, and it can go up in smoke in seconds. So, we've had cases back in the company I work with where, 5-10 years later, you're still dealing with the same claim from just one incident of dropping the turkey there. So, you have somebody who's, trying to sue the manufacturer for not making a strong product in this case, and there's all these different types of warranties that are involved with things. So, yep. Yes. So accidents do occur and can occur quite a bit. So when it comes to employee accidents, this is an unfortunate one. Where you don't ever want to be in this kind of situation. I was actually involved with hiring this contractor to work on a particular property in another state, in another location, and in the midst of trying to get everything organized and set up, I wasn't able to get through to the individual. And when I finally did, the individual told me, "Look, I remember you told me, you work in an insurance company. I have this problem." I said, "Well, what's the problem?" He says, "Well, I had this project going on, this project going on, this project going on. So what I ended up doing was I ended up subbing out my work." And that's, jargon for giving a project to somebody else to finish. But I had him wanting to go fix a roof. So here he is. He has this guy, walking up and down a ladder, and he says, but the problem was that the individual fell off the ladder, and as they fell, they landed cockeyed on the side of the vehicle that they were parked next to, because it was a multi-story house that he was going up on. He fell on the side of his neck, snapped his neck, and died instantly. When the general contractor, the person that I was in communication with, received the phone call, they were trying to airlift him to the hospital, and he died instantly. So that's not necessarily, that is a problem, that is a major problem to have, but that's not necessarily the general contractor's issue at that point. The general contractor's issue was that was a man of a family of 4 children and a wife, who were left, with no father at this point. Um, that family became very aggressive and decided to sue the contractor that I was potentially hiring here. And he turned around and he stated, well, he's just a subcontractor. He's no one to us. Um, and, he's no one to us in terms of this. What's involved, and I said to him, well, time out. Let's go back here. You need to first establish, is this person an employee or is this person a subcontractor? Because they're saying you would take him here, you would take him there, you would do this, you would do that, you give him work here, you would supply these things. As a business owner, that's one of those things you should really get familiar with, get to know, is whether or not an employee is an employee, or an independent contractor is an independent contractor. And if they're an independent contractor, they should have their own insurances. They should have their own things. They can come and go as they please. However, as an employee, it's a different story. So unfortunately, that man was an employee. And when you are an employee, you need to carry something called workers' compensation. And, general liability will protect you for everything outside of the business, but workers' compensation will protect the individuals inside the business. So there's that situation of, when it comes to a workers' comp claim, how much is a human value's life? I have no idea. It depends on, the type of coverage that needs to be there. So if you turn around and say, you know, I'm going to make $10,000 in a year, well, then the insurance company is going to give you $10,000 worth of coverage. But if they come to find out 12 months later that, I'm going to guarantee you they're going to do something called an audit, they can turn around and they can say, hey, you didn't have $10,000 worth of risk. That's the 4-letter word when it comes to the insurance world, risk. You didn't have $10,000 worth. You had $210,000 worth of risk. And if that's the case, you need to pay us for the exposure of that risk. So there's a couple of words that are out there, jargon that's out there, that kind of gets a little, it's privy to the insurance world in this case, but you as a business owner, you want to protect your assets, which is you yourself, and anything that you're investing into this thing. So something like that, it's kind of our job to kind of get you to view these things from a perspective. Auto accidents, hey, that's very easy to fairly understand. You drive around in your own personal property like a vehicle, and you get into an accident, that's something that you would be protecting. You want to make sure that you have that. But like I was saying, loss of a key employee. Now, this is a business owner. Most people don't necessarily realize this, but um, you know, let's assume at this point in time, I think BC is a very, very important individual to the Nebraska Enterprise Fund, or Jim might be a very important person to the Nebraska Enterprise Fund. If something was to happen to Jim, God forbid, if something was to happen to Jim, this organization can actually insure that individual in case of a severe loss, a major loss of an individual's life. You don't think about that. I was working at a company one time, second story, where it was overlooking this overpass right next to Interstate 80. And as the vehicle was going by, I'm almost set up almost the same way with headphones, talking on the phone, and all of a sudden, as I turn to look outside the window, I see this helicopter coming straight towards the building, almost looked like it was going to hit us and pass us. And I was so, this is like 9/11 time frame, that I decided to duck under the desk of the building, not realizing and telling everybody, hey, you need to duck, there's a helicopter coming. But what I didn't know was seconds before that, that helicopter was airlifting an individual that had a head collision with another car that was right there on the overpass. The driver of the vehicle died instantly. And that helicopter that was there was airlifting two children that he had in the back seat. Now imagine this. Imagine that guy might have been a business owner. Imagine him owning one of the. We have a lot of entrepreneurs in this area. Imagine he's a business owner and he has employees of maybe 13 to 40 employees out there. If this man was to die, what happens to the company? The company just doesn't stop. It doesn't stop from one day to the next. That's a key employee to that organizational's existence. So there is a potential that an insurance company can come in and actually write a check or give funding to the existing individuals that stay behind. If it's a corporate structure like a vice president, or things like that. And, you have to think about this sort of thing that we're just trying to bring it to light. Maybe you never thought about these things. But there's insurance that would actually not just cover the individual, but it'll cover the loss of revenue into this business. Now think about this in today's pandemic world about lost revenue. If you ever want to see how the federal government thinks businesses are very important, think about all of the money that they're pouring in from a federal level, from a state level, from a local level, just to try to keep the economy alive because of the loss of the income that's coming in from the general pandemic. So there's a lot of different things that insurance has the ability to kind of assist you with when it comes key to this. So just keep those in mind. You're not just protecting the business, you're protecting yourselves, you're protecting what's involved when it comes to the day-to-day things. You might be just protecting the legacy that gets left behind, like that business owner that passed away in seconds. If you ever visited a funeral, it's never the perfect time to meet with somebody about this. But there's a huge difference when you're visiting in a funeral, and you go up to the remaining individuals and you say, "Listen, we have you protected. We have you covered. Listen, don't worry about any of the expense portions. There's a check coming that's going to cover this." On an average, to be buried here in the area of the Omaha, Nebraska area here is about $8,000 to $10,000, and then not a lot of people currently have that ready to go in a bank account to do these type of things. So if you had some sort of insurance that would protect you and maybe leave a legacy for your children or your remaining spouses or business, that's a check that comes in that person's name to that beneficiary, that individual that remains behind. So it's things like this that you may have never ever thought could ever exist, but it's out there. It really is out there, and it's something to kind of keep you in mind when when you're thinking about these things. But so small business insurance, it's like I said, it's if you think back to that story, it's taking this sort of ordeal and just assigning the risk of this for whatever circumstance, whatever could possibly happen in the potential future, just transferring that risk over to somebody else so that they can go. Now, let's use car insurance for a quick example of how this is a transfer of risk. Listen, the state of Nebraska says, look, there's two types of insurances that you must always have, and based on these circumstances. If you are operating a moving vehicle on a street, you need to have coverage for $25,000, what they call 25,000, 50,000, 25,000. So $25,000 of injury in case you get hurt in case somebody else gets hurt. So think of your vehicle in the middle and think of everything outside of your vehicle. If you were to bust something and get into a car accident with an individual, you need to have $25,000 ready to cover that person's expenses. Now, that's what Nebraska says. If you don't have insurance, you need to prove to the state of Nebraska that you have $25,000 in a bank account ready to go to pay that person's claim. If you don't, I apologize. You probably get ticketed. You might even get thrown in jail, whatever. 25,000, 50,000, 25,000. So the $50,000, for the property damage. Well, you're taking this vehicle and boom, you're smacking it against something. That's somebody else's property. So you have to cover yourself. You have to cover the individuals out there. Now that's not what they call full coverage, but that's to say those are the state minimums. If you don't have that money ready in the bank, which most individuals on a day-to-day basis don't have that ready to go, then you can do what they call assign the risk, transfer that risk, take it away from you and give it to somebody else. So, we have the commercials that are out there. 15 minutes can save you 15% or more if you call such and such. Little green guy walks around, or you're in good hands, or like a good neighbor, anybody could be there. But what I'm telling you is these people, they're out there. These companies are out there for those particular reasons. They take and they say, okay, Joe Schmo, John Smith, whoever the person is, we will take this on. We will take you on as a person, but you need to pay us a piece of this dollar amount that we're going to call a premium in this case, just to consider holding that money aside for your issues. So that's kind of how that generally works in a nutshell. And then, like I said, in the claims world, we get the aftermath of it. We would look through the cases and go, oh my goodness, why did we do this? A quick example, my last case that I worked on that company, I was working on a case where we insured an exotic animal, a lion. That's exotic. It's not a house cat. It is a wild animal that likes to be out in the wild. And however, unfortunately, the next door neighbor's little 6-year-old girl wanted to pet the little kitty. Well, that's not a little kitty. That's a huge lion. And the lion was very hungry and decided to take both of the 6-year-old's child's arms right off from the shoulders. So unfortunately, think about this. Imagine that individual that owns the lion. I don't know why they would own a lion. Didn't have insurance. Boy, oh boy, that would be drastic. That individual's going to jail. That 6-year-old girl, the potential, this is how we would look at the case. The potential for that 6-year-old person to live a lifespan of another 80 years exists. So when you see that 80-year time frame and go, man, this is a monthly payment that child is going to receive for the rest of her life. There's a huge amount of risk involved with that. So risk is a 4-letter bad word in the insurance world, but that's what governs everything in terms of it. The more riskier you are, the worse you're going to be when it comes to having to pay insurance. So think of the roofer. He has to travel 3 stories up. That's more than 30 feet up. Very high risk. What is the potential for somebody dying that's 30 feet up? Very high. Versus the office assistant, how many people are going to die from a paper cut? 0. So, you got to look at it that way. So just as an FYI, okay? Now, here's an example of what transferring risk would be. Assume you are a business owner and you have this property. For example, you have $150,000 in the bank account and you decided that you're going to buy this brand new skid loaders. I'm not sure if you know what those are. Kind of like those forklifts that go up and down. They can do a lot of different things with this stuff. You're in the construction business. That skid loader cost you $35,000. Now, you have a potential. Are you going to put insurance on that equipment? Your option is you could, or maybe you don't. You can do what they call self-insure. Like I said, prove you have the money in the bank, right? Or you can get it insured. So let's look at this for just a second. 150,000, you go out, you spend all your time to gain that 150,000, you spend $35,000 at this point, and then something was to happen. What happens if it got stolen? What happens? What happens if you lost it in the peril? So self-insured, meaning you're going to use your own money in the bank account, you're going to replace that skid loader. So that would be a $150,000 example at this point, right? Minus the $35,000 to purchase the original skid loader. If that thing was lost, damaged, or stolen, you have to go and spend another 35. Listen, there's a lot of memes out there called Karens. Oh yeah, mean Karens. You cannot Karen this situation. I have a receipt and I need to replace my $35,000 skid loader. That's not happening, buddy. I'm so sorry. You know, I apologize. The manufacturer didn't cause this issue. So you would have to pay another $35,000 there. So now your bank account went from $150,000 down to $80,000 just because you needed this piece of equipment. However, check this out. If you were to go out and buy insurance on this, and this is interesting enough because we just did a quote on this one not too long ago here. So this is fairly a new and actual real quote that's involved in this. You can buy the premium and the deductible and transfer all that risk to a carrier just to replace that $35,000 worth of equipment. So in this case, the premium actually came out to be $798 a year. Pay $798, and this is a good term to remember, in case, in case you lose something with that $35,000 equipment. You know, you go to the store and they want to sell you all different types of warranties. Well, there's a reason why they would have the warranty that's involved in that. But when you look at the numbers here, you pay $798,000. So we'll go back to the same example here. $150,000 minus out the original purchase of the skid loader, now minus out an additional $798. And or if you ever had the premium, that the deductible that you have to essentially pay, the most you would pay at that point would be $2,500 up front. They replace the rest. So that leaves you with $111,000 still in the bank account. That one's kind of a no-brainer. If you're a business owner, you have to say, that's a business deduction. That makes total sense for me to transfer that risk to that insurance company to essentially do that. It's worth my dollar to go out and do that. Why not? I don't want to spend another $35,000 that's out there. You could use that $35,000 to do whatever. You can go on an extended vacation if you wanted to, if that's the point. But, you know, you got to look at it. You got to look at it that way and say, man, the glass half empty, half full. It's still half, no matter how you look at it. Okay, but you have to start thinking in these terms. So there's a lot of different types of insurances, and I'm gonna briefly reference this at this point. There's something called BOP insurance. Well, we like to nickname it. Remember, there's a lot of verbiage in this industry here. BOP insurance. It stands for Business Owners Insurance, or Business Owner Policy. But let's put it this way. Let's put it this way. If you've ever gone to a fast food restaurant, you know what the number one is going to be. Okay, you know what the number 5 is going to be because you're looking at it. You're looking at the product, and it's there. It's packaged for you. It's a bundled deal. You get the burgers, the fries, and the drink. Boom. That's the best way to summarize what a BOP insurance is about. Business Owners Insurance is about. It's a complete package, and it gives you a little bit of this and a little bit of that, and it combines it with this and it combines it with that, and it's all grouped in one. It's put with a little red bow on it, and you're done. That's it. So I mentioned this to you because there are companies that will sell you a BOP insurance. There are individuals that are out there with a BOP insurance. Now, this is a personal story where I had mentioned to one of our clients, hey, who do you have your insurance through? Make sure you go through your insurance to make sure that it's adequate. Now, if it wasn't for a conversation that we had in passing one day, only a few days before, the individual brings me the insurance policy. We take a look and go, oh, okay. I wouldn't have thought anything of this. But going through the coverages of that policy, a BOP policy, inside of there, it said business property, total $5,000. Now, hear me on this one. If it wasn't for a prior conversation with the person days before that, where the individual bragged about how they just finished replacing multiple, it was a salon, multiple chairs, multiple furniture, $8,000 a piece. He just replaced more than 10 of them. And I looked at the policy, says, whoa, excuse me, raise my hand kind of thing. Excuse me. This only says you have $5,000 total of that coverage. And you need to, not for nothing. This is not talking good or bad about anything, because this works for you as an insurance in general, but you need to change that line item. Even though it's a BOP, you have to change this and add more coverage to that business property that you have, because it's just not enough. It's not enough. Now, hear me on this one, because this is, knock on wood, it must have been a godsend at this point. 2 days, 3 days before that is when he bragged about the cost of these things. Looking at the policy, tell him, go back to the insurance company you got this from and up the coverage on this thing. That same day, he goes back and writes an email to the individual. He wants to change the coverage to increase coverages, and the insurance individuals acknowledged it and was starting to work on it. Now, here's the case. It's a salon. This is the business owner. Business owner goes home for the day, but the salon stays open, and multiple individuals working there. Unfortunately, someone left a hot wax machine on in the back, in the supply room. Can that happen? Absolutely, it can happen. Is it the business owner's fault? No, it just happens. That's what an accident is about. Oops, it happens. Well, that hot wax got so hot, it bubbled over. And when it bubbled over, it was in an enclosed closet supply room where there's paper towels and acetone and alcohol. So when hot meets alcohol, poof, a little fire happens. So the back room of the supply room of this business caught on fire and started to burn the business. Now, that wouldn't be an issue, except for the fact that where this individual was renting, the bay next to them ended up being a wine business. Alcohol, that's their main product. So the fire that was next door touched the alcohol that was in the following business. Poof, a massive fire blew up, all because of one little hot wax machine staying on. So what happens at that point? Well, I hate to tell you, the truth of the matter was the wine company, the wine business, ended up suing the individual I knew. Suing because, was it the wine person's fault? Absolutely not. No. So his insurance had to pay, and he had to pay his insurance. So the insurance company sued the business and the business owner of the individual we knew. Now, the business owner at the time only had $5,000 worth of coverage. His saving grace was that he had stated and sent in to the individuals there that he wanted to increase the coverage because he needed more. So the person was out of work for more than 6.5 months, became very good at golf because that's all he could do at that point, was just sit around and not do anything. The business that was next to him burned down. The business next to that business burned down. The entire facility, the owner of the facility, the strip that they were in, all sued this person, all because of the hot wax machine. So do accidents happen? Absolutely. And can you be covered for that? Who knows? You try your best to be covered for in case something is to happen. So these are things that, I tell you that if you never thought about, boy, I hope you take a moment to kind of just let it soak in, because you never know what could be the case. And that's the issue. You never know. So when it comes to the business property, you have, it protects the buildings, it could protect the personal property. It might, like I said, the furniture that was involved, the equipment that's involved, like the skid loader, whatever it is, you include it in that, what they call a schedule. You include it in the detail of what it is. You know what it would be, but the person who might be helping you with the insurance might not know. So you need to know, what is it covering? Why is it covering it? Just get familiar with this stuff. You don't need to know all the specificity to it, but the generalization of it really does help quite a bit, versus not. So, like I said, the guy was closed for over 6.5 months. Well, what happened? The insurance company had to make him whole, bring him back to where he was before the fire ever happened. So they had to do that. Plus, came to our office and said, "Hey, I need my financial paperwork. I need my information, my details, because they need to know, if I was still up and running, how much money would I have made up to today." And we said, "Oh yeah, sure. Well, we don't do your bookkeeping at that moment, but yeah, sure. We could look at what the financials look like the year prior versus this year with the potential, and that." So think about this thing. Boy, there was no bigger feeling in the world, with the biggest smile on his face when he came back in and says, "Guess what? My check came today." And when it came, he actually brought a bottle of champagne to hand us and said, "I thank you so much, because if it wasn't for you pointing out the smallest little thing, I would have lost it all." Now, you know what? I'm not a drinker that way, but the thought of the matter, that's what matters more. We're there to try to protect your assets in this case. Okay, something that you need to kind of keep it in mind. Okay, but it could, but at the time of making this video, there was a lot of rioting that was going around in town. There was a lot of businesses being damaged in various parts of town. You have to look at your policies to say, is this going to be covered? Because it's so heartbreaking to think about. You wake up every single day and you get to work, you do your job, and then you want to go home, right? And at the end of the day, you're doing it for a reason. You're doing it because you're trying to better life and better your world and things. And then all of a sudden, a small situation can happen, or a big situation can happen. A riot can take over, or COVID could ruin your life, one or the other, right? But rioting may not be in your coverage. You have to look to see, because if somebody takes a brick and throws it against your glass, you might be responsible for having to fix that window because it was not covered in your paperwork. Yeah, you might not have realized that wasn't going to be replaceable for you. So now you're stuck having to fix everything, Or we just down in Florida, insurance companies hate, by the way, having to deal with the state of Florida, because if you ever looked at what does the prediction look like for a Florida year, it's got lines going everywhere with tornadoes saying potential tornado, this way, this way, this way. And with a tornado, that's like God sneezing and then taking all your house and blowing it somewhere else. It just happens. So you have to look to see, does your policy cover, the hurricanes or the flooding or the damages that can occur from fire, from theft, from vandalism. I'm going to tell you right now, it will not cover nuclear damage. So if you live by a nuclear power plant, kiss it goodbye. It's not happening. They never want to touch nuclear. Earlier, I mentioned about workers' compensation, what that references. You really need to understand who is an employee, who is a subcontractor, okay? I tell this story every day. If I walk into my office and I see a flood of water coming out of the bathroom, my first reaction is I'm going to call a plumber. And that person is going to come to my office and he's going to fix whatever he's done, right? But usually they say, I'll be there between 8 and 12. Okay, or whatever the time frame is. Okay, no problem. Comes in, does this thing, and the last thing he does before he leaves is, gives me the bill, and I have to make that payment right then and there. And then he leaves, and I never see the person again. Well, that's a huge difference in terms of relationship. If I was to walk in and the water's everywhere, and I go, "Hey, Joe Schmo, go get my materials, go get my tools, go get the ratchet that I have in the back there, go over to that toilet, pull that toilet out, pull this out, put this new wax ring in. Come on, get it done. Let's see, can you get it done in an hour? Can you do it faster? If you are directing that person, I hate to tell you that the rules say that person is an employee, not a subcontractor. But if you tell them, hey, look, I got this project, I need you to get this done for me, and you leave them be, it's going to take maybe 2 to 14 weeks to do. That's an independent contractor. They get to come and go whenever they want, not when you want. And as a business owner, you need to know that, because if you're directing them that way, then you might have to have them in your insurance. Okay, so when it comes to workers' compensation, I guarantee you right here, right now, right here, you will have to do what they call an audit. It's going to come no matter what. They want to make sure you had enough coverage. And when you do that audit, they're going to ask you for the canceled checks. They want to see your payroll. You know, if you don't know what the payroll is, then as a business owner, you need to kind of sit down and reassess yourself, what you paid other people. They'll even ask you, what is the role of this subcontractor? Like, what do they do? And you have to be specific to do that and explain it to them. If you don't, they'll turn around and say the calculation is based on this, this, and this. Like I said, oh, you said you were going to make $10,000 in a year, but you made $210. Now you owe us $50,000 for the insurance from last year. So you don't want to be put out of business because they came back and put a lien against you because you didn't have enough coverage. You have to understand that that potential risk is out there. And like I said, just keep it in mind. Now, the specificity of things that we could go through, you know, if you would ever sit down with anybody or just chit chat with them. Okay. But usually it's based on full 100% payroll reasons. How much you pay a person versus how much you paid someone outside of the organization. Please keep it in mind. You don't want to be like the general contractor who's trying to settle a multi-million-dollar case because they lost their father of 4. Okay, it's horrible. It's horrible to think, but those things exist. How about this one? Professional liability insurance. Now, what in the hey-o is that all about? Well, think of it in this manner. It's also considered like E&O insurance, errors and omissions. So if you recognize the slide, that slide is like that for a reason. And omissions. If you forget to cover something or you made a mistake and it was detrimental to the other person, that person can sue you. Here's an example. You ever thought about suing an attorney? Yeah, that happens a lot. An attorney can sue another attorney. And for what reason? Well, if that was the case, errors and omissions can cover that individual, that professional that's out there for those things. So there's coverages like this that are out there that you would have to think of. It might not even be your fault. Remember the wax? It might not be your fault, but it will end up being your fault when you have to make that payment. So just keep it in mind when you have these things. Nowadays, since we are in this pandemic, I should be actually wearing my mask to cover you, but don't worry about anything. My computer has antivirus, so you're okay. You're not going to get coronavirus. But the same fact that I have the antivirus in my computer is for a very specific reason. Data breaches. Data breaches are a massive thing nowadays that it seems like everybody in the world is getting a new card and a new letter in the mail that says, oh, by the way, we were hacked. And don't worry about anything. We're going to pay 1 year's worth of protecting you on a private company's website. So when Blue Cross Blue Shield, you know, to name an insurance company, when they got hacked, they had to send letters out. So my 11-month-old child received a letter saying, don't worry, we're going to cover you for 12 months for insurance because we're going to protect you from having you, go out there and have bad credit. She's 11 months years old. Doesn't matter, right? But things like this can happen. Okay, so data breaches can occur. You have to look at your infrastructure, the type of business you're doing. If you're doing a lot of online stuff, you should have coverage for this type of thing, just to be on the safe note, especially if you're dealing with what I call PII or P2, if you the Roman numeral 2, P2 information, where it says name, address, phone number, telephone number, social security number, bank account. That's privacy information. If you are dealing with any of that stuff, you need to have a serious antivirus protection. Okay, FYI. We touched briefly on what key person insurance would be, and why that would be important on things. Keep it in mind, if you're never around anymore, which is hard to think about, your business is still going to be there in some form or fashion. And wouldn't that be amazing if you are Milton Hershey and your company, Hershey Company, is still in existence today? Things like that can occur, okay? And it can occur with key person insurance. And these things are, that type of key person insurance, believe it or not, there's multiple industries that are out there to get what they call your dollar, okay? You have the stock market, they're after your dollar every single day. You have the banking world, they're after your dollar every single day. And then the third major faction, like I told you, Lloyd's of London, they've been around since the 1400s, okay? Insurance is another industry that's after your dollar every single day. And why? Is because they need to protect everything that's out there. So imagine that. Imagine you have this type of coverage that somebody leaves behind, and you can actually use this insurance to actually create what they call personal financial banking. Interesting enough to say, but you can actually use these type of things to fund other things in the future. Have you ever heard of the term trust fund baby? Those things are out there, and that's done through insurance. Okay, so just to keep that portion in mind. A key person could have an insurance policy in place and then have a contingency plan after they're gone that automatically creates trust fund babies in the future. Things like that, all done through the lifespan of an insurance. So FYI. We're kind of getting a little close to time frame here, but there's a couple things here. There are things nowadays, like on the health industry world. It seemed like what gets termed as Obamacare or Affordable Care, I kind of threw things upside down or whatever, but there's still things out there like short-term disability, long-term disabilities, the impacts on these things on a day-to-day basis. Man, I'm grateful for some of the things that this on a personal note, with how the disability insurances have assisted those that not only are infected or hurt, but the ones that are around. So when it comes to, these type of disabilities, you have to prove certain things that you just can't do, 2, maybe 3 things of the daily activities in life, like feed yourself, like put your clothes on, go to the bathroom. These things sound weird to say, but this is the kind of insurances that could probably assist a person with these things. So the elderly tend to have coverages similar to this, but what's short term versus the long term? I would speak with somebody regarding that, because it's really it could be beneficial to you. It could be one of those things, one of those gaps in your coverages that you might not know about at this point. But you gotta, what is it going to take for you to kind of look at this? You have to kind of look at your business from the inside out. Stop working in your business and start working on your business when it comes to these things. And what I mean by that is step outside of yourself, look inside and go, where do I have a problem? Okay, or where could a potential problem be? And get the coverage for that. Now, I'll tell you, McDonald's never thought they would change the world in this fashion, but I will tell you, the next time you go to grab a cup of coffee, look at the top of that lid. It's going to say, caution, hot. Okay, those words came about because an 80-plus-year-old individual burned herself. People know bits and pieces of the story, but it actually happened in Nebraska somewhere. Bits and pieces of this. An 80-something-year-old individual burned the inner thighs of her legs Because the McDonald's coffee was very hot and the lid came off. Okay, but what most people don't know is in the manual of McDonald's, it says keep the coffee pot at 450 degrees all day long. Now, people don't know that part, but because it was written down in your business plan, in your business protocols, McDonald's was sued because of that. Okay, and it changed so much that everywhere you go nowadays, when you go to get a cup of coffee, the lid or the cup itself is going to say hot. Simple words that can make an impact. Okay, and what I mean by simple things can make an impact, that seems simple, but nowadays the world is upside down because you have to go come hell and high water through this security gate when you go to get on an airplane. And there's a reason why. Because unfortunately, there is bad in the world. People get on a plane and decided to take this plane and shove it into a building where it didn't exist. And boom, the building is gone. Well, you know what? Now, because they do that, every policy that you see has this one line item that says terrorism clause. Terrorism may or may not be covered. One incident can change the entire world for the rest of the life. And you might not know that. So this is what I mean about looking in your business, looking at your business instead of being in your business. And sometimes it's hard to see the forest behind the tree that's in front of you from the day-to-day activities. But when you view this, you say, do I need this kind of thing? Yeah, you might. But the best thing you can do is try to figure inside your budget somewhere and say, how can I afford this? Remember the skid loader, $35,000? Yeah, you might afford it. You might be able to pay that twice. But why? If you only have to pay it for $700. Okay, so keep these things in mind when it comes to this. I'm looking down at the clock. I apologize that the videos really didn't work today, but I'll leave you with this thought. There are things with, where do you get this from, or how do you get the information from? How do you educate yourself? There are individuals called captive agents that are out there, and there are individuals called independent agents. The difference between the two, a captive agent has their own type of products, and they're going to sell you what they have, where an independent agent is going to solicitate themselves to multiple insurance companies and look for the product that it is you need. Okay, you might not have known that you needed this, and there's a market out there for you. So you might have to go view that and find it. But I leave this to you at this time. I'll leave this as the last slide because we're kind of close on time here. So I'm not sure if we need to open this up. Do I unmute this, or how does this work?
I think you can leave it, Robert. Thank you so much. I think it was an awesome presentation, and it was a lot that we didn't know, and I think people are going to really think about that. Jim, did you have anything you wanted to say at this time?
Sorry. Yeah, no, Robert, we just want to thank you, and we want to thank DoSpace for hosting us today. All right, well, thanks to DoSpace, and thanks to Robert today. Thanks, Robert, for doing this. This is why insurance is important. So you just don't know what's going to happen. The main point, and Robert made it very well, is make sure you're talking to somebody to help you protect yourself against the risks that are out there. It's very important. And insurance is one method that can protect your business, it can protect your family, and it can protect your family's future. So really take it serious and work with it. There's plenty of insurance agents. Work with one that you trust and that will listen to you and understand your needs. So thanks again, Robert.
You're welcome. Thank you. And thank you again for hosting us with this. Well, I guess until next time.
All right. Thanks again to DoSpace and BC and Robert for putting this together. I think we can wrap this up.
Okay. Well, have a nice day, guys. Thank you.
Bye-bye.